David Weaver, Megan Wallen, Tom Pop. Securities offered through HD Vest Investment Services, member SIPC. Advisory services offered through HD Vest Advisory Services, 6333 North State Highway 161, 4th floor, Irving, Texas, 75038, 972-870-6000. SWC Wealth Management is not a registered broker-dealer or independent investment advisory firm. It's now time for User-Friendly Finance with Dave Weaver from SWC Wealth Management on News Radio, WHP 580. If you have a question for Dave, call 540-0580. Now with today's show, here's Dave Weaver.
Hi, good morning. This is Dave Weaver with SWC Wealth Management, bringing you user-friendly finance. And it feels like spring already. The sunny weather always, has a good effect on everything. User-friendly finance is a show where we started to do try to go through the subjects that cover various aspects of your personal financial situation. Today, we're going to go back and just talk a little bit about taxes. For anybody that's working on their taxes, feel free to give us a call. We're going to talk about some of the things the IRS is looking at for audit this year, some of the tax law changes that are coming up, pretty much whatever people want to talk about. If anybody calls in, we'll try to cover those questions as well. And the tax season is in full bloom, so if you have any questions, feel free to call. SWC Wealth Management has two offices. We're located in Palmyra and in Carlisle. In Palmyra, we're at 103 West Main, and in Carlisle, we're at 35 East High. You can reach each of those offices very conveniently. They're about a block off the square. You can reach us by phone at 706-0700, or you can reach us via the web at swcwealth.com. And our email address is swcwealth@gmail.com. The services that we provide are pretty typical to what you would find at a full-service financial planning firm. We do retirement planning and estate planning. We also do college planning, and one of the subjects we're going to talk about today, which is tax planning. We help people look at their 401ks, try to determine if there are things that, if you're invested appropriately for your time horizon and risk tolerance. We also do insurance and annuities. We do variable annuities, equity index annuities, fixed annuities, pretty much whatever type of an annuity may satisfy what you are trying to accomplish in your financial life. We don't do a ton of annuities, but where they're appropriate, we believe that they have a place in some people's portfolios. They're not for everybody. And we'll probably have a show where we just talk about annuities. In terms of insurance, we do life insurance and long-term care. We don't do health insurance, although it's someday, who knows. I don't know. Health insurance, I never really like. People always get frustrated with health insurance because the prices always go up, and who knows where the future of health insurance is. At this point in time, we do life insurance and long-term care. I wanted to talk for a second about an event that we have coming up. It's called, the subject of it is going to be called Retiring on Purpose. We're going to be holding at the Bosler Library on March 21st from 6 to 9. And the Bosler Library is the public library in Carlisle. It's right on High Street, same street as our office. It's a complimentary educational seminar. It's a special event. There's no charge or obligation to attend. We're not going to be selling any products. We're just basically going to be talking about the subject of trying to retire the way you want to retire. And we'll discuss navigating the transition from your work life, creating your own purpose statement, trying to take steps towards living a purpose-filled retirement. If you're retired or approaching retirement or want to plan for your future, you don't want to miss this event. Again, at 6 o'clock p.m. at the Bosler Memorial Library in Carlisle on Wednesday, March 21st. We are going to have to limit our seating because we already have the room booked. The call-in number is 800-457-1367. That's 800-457-1367. Or you can register at our website at swcwealth.com. Click on the events tab, and then on the Retiring on Purpose seminar, and the registration links at the bottom of the page. So that's all set up and ready to go. All you have to do really is attend the seminar, and I think you'll find it very beneficial. helping you to plan your own personal retirement. And nobody really has a good picture when they start out working of what their retirement is. As you start to work and you go work your day-to-day life on your job, you start to think about stopping working, but a lot of people don't put a lot of planning into what they want to do when they retire. And that's part of the purpose of this seminar is how do I move from the everyday working life to the future that I wanted to create. And if you start early enough and you plan for your future, you'll be able to create the retirement that you want, and not just you get there and there's nothing to do kind of retirement. I always tell people, when you're first starting to work and you think about retiring, nobody ever envisions, well, maybe some people do, but not a lot of people envision retirement as sitting on your chair in front of your TV or your sofa on your TV, just watching TV all the time. That's not the retirement you envision when you've worked your whole life to get there. You ought to have a destination, whether it's a house at the beach, or a fancy car, or a custom car, or whatever it is. Being able to go to flea markets. Everybody's got their own things. Some people want to travel. Some people want to buy an RV and hit all the national parks. But try to create the vision that you want, and the sooner you do it, the better chance you have of achieving it. And you want to create a retirement plan that supports it. So again, our event is on Wednesday, March 21st at 6 p.m. at the Bosler Memorial Library in Carlisle. We're going to have light refreshments and hors d'oeuvres, and we'll be glad to meet you. We'll have our team there, and you can discuss your personal financial strategies, and we'll be able to help you with any questions you might have about your retirement. Again, the intent isn't to try to sell anything or push any products or anything like that. This is strictly trying to help you figure out and plan your own personal retirement. Really looking forward to it. It should be a great event. We already have some people signing up for it. We sent out some mailers, and we're also advertising on our Facebook page. So if you want to go to our Facebook page, you'll be able to find it there as well. So that is it for the sales pitch for our seminar that's coming up. We would love it if you would attend. Feel free to meet the team, and we'd love to get everybody's input into what they want to do for retirement. So I was going to be pretty open about the subjects that we want to try to cover today regarding taxes. And if you have questions as you're filling out this return, if you have some questions on next year's tax laws that are coming into play, by now you should have seen a change in your paycheck. Not everybody has. The IRS just came out with their new tables. I'll cover that in a little bit. And I also will talk about some of the red flags the IRS is looking for this tax season. Some of them actually have to do with the new tax law. But I don't know. I've had a couple people call and say, hey, I was expecting a tax cut. I didn't get mine. Why isn't my paycheck changing? The IRS just really came up with the new W-4s in the last week. So if you haven't seen a change in your paycheck, you probably should. You want to be careful. They have a process and a special site set up by the IRS to help you figure out whether your employer is holding the correct amount for tax. And we can't, and you can a lot of times control a lot about how your payroll service does this, works the tables. But they are out there. They should be. You should have seen them adjusting on your paycheck. If not, it should be very shortly. And you want to make sure that by the end of the year, you just don't get a surprise when it comes to be tax time next year. So with that, we'll take a break. We'll talk about some of the IRS website, the things that they're looking for in audit this year, and we'll be back right after the break. This is Dave Weaver from SWC Wealth Management on User Friendly Finance.
Let's get back to User Friendly Finance with Dave Weaver on News Radio WHP 580.
Hi, this is Dave Weaver again with User Friendly Finance. Welcome back, as we're going to talk about the subject of taxes this year. Again, we'll probably talk about this segment about the updated W-4, just to make sure you're on track with that, and then we'll get into some of the things the IRS is auditing for this year, and then we may cover, if we still have time, we'll cover some of the highlights of the new tax law. Again, this is Dave Weaver with User Friendly Finance from SWC True North Wealth Management, and we have a call from Jack in Hershey. Hey, Jack, how are you today?
Good morning, Dave. Thank you for taking my call.
Sure. Oh, and by the way, I forgot to announce that we are doing our our $10 Panera cards for anybody that calls in. So Art will grab your information after the call.
Fantastic.
Sure.
My question is more so of a concern, which probably bothers you as a business person as well as myself as a client. It seems that we dutifully put our taxes together, get our information, and take it to our tax preparer, and then, lo and behold, we get this notice in the mail. I got mine yesterday. It's called the corrected version of the information that I received from my investment company. And I'm thinking, like, okay, how late do I wait to give the preparer the tax information? Because, my gosh, they ought to make the taxes due on May the 15th instead of April, the short period of time that if you're involved in things like K-1s or these corrected issues. So I'll leave it go at that.
Yeah, there's a couple of time problems that are kind of embedded in that. And I think it starts with the fact that if you have is your account with a brokerage firm?
Yes, it is.
Yeah. So what happens with a brokerage firm is that you may have investments from multiple companies, and because a lot of people get upset with their investment with their brokerage account or the firm generating a brokerage account. But if you have 20 or 25 different investments, any one of those investments could issue information that may have to subsequently be directed. Your brokerage account is really like just a record-keeping vehicle. You pick your investments, but your record keeper for the brokerage firm is the one that's actually documenting all this information, taking information from your 20 or 25 investments, and then issuing you a 1099. So if any one of those companies has reported incorrect information and has a problem significant enough to modify the 1099, you have to update your return. And the IRS has been pressing and compressing that date. Now the date to have the information is, I think, February 15th for 1099s. They're supposed to have all the information out. So they have to get the 1099 out. But sometimes the investment companies are struggling to get that information together. Back in the day, before they moved it to February 15th, we were constantly getting revised 1099s. The process has gotten a lot better, but I don't think there's a fix right now because all the information is really complicated. I would say, and if you have investments, particularly some of the bond funds, like private activity bond interest, a lot of times gets corrected for whatever reason. I would wait probably till March 15th or so to, to get the information together for your return. The other problem is if you have K-1s on your return, those aren't really due until March 15th if it's coming from a partnership or corporation or LLC or whatever. So you have a problem there as well. And those sometimes get corrected, but usually if you get as far as March 15th, they're going to extend, and then they have until September 15th to file those. So I would probably, if you have a more complicated situation, I'd probably be inclined to maybe wait till March 15th just to be safe. But, you don't have to. Your tax preparer may not like it, may get you closer to the filing deadline by doing that, but you might be more assured of having the information in. You don't want to get into the hassle of doing a modified or 1040X amended return just because you got corrected information from your investment company. So I don't think there's a fix for it just because of the nature of the information they're trying to collect. You don't want to wait till the very end, but I would maybe wait till March 15th or so. But
I appreciate that. That's very helpful. Frustrating, but helpful.
Yeah, it's all frustrating. People hate when they do the return and get a corrected 1099. I can tell you that. It drives everybody crazy. So anyway, Art will grab your information, and thanks for calling.
Well, thank you very much.
Yep.
I appreciate it.
Yeah, have a good weekend. Okay, now we'll go to Michael. Michael, how are you today?
Good. How about yourself?
Good. What can I do for you?
I had two questions. One, I have a daughter that's buying a house, and I wanted to give her some money towards the down payment, sizable amount. Figured I might as well help them while I'm still alive and wait on dead.
No, it's it's interesting that you say that because we talk to people not every week, but at least every month about money that you're accumulating that will pass to your kids, and I think it should always be an option to pass that while you're still alive. You get to see the kids enjoy it. Otherwise, you'll never get to see them. You get the benefit of what you've worked hard for.
I agree. My question is, I understand the federal thing, but on the state next year, is there taxes on a gift? And I know next year when I file my taxes, since it's happened in 2018, that I have to fill out a gift tax form. But do you pay taxes on that?
No, gifts are not taxable, and not they're not a deduction for the giver. They're not a taxable event for the receiver.
Is that state and federal? I know
that's
federal
both.
They have like $1 million limit, which is
it's actually
a lifetime $1 million limit or something like that. But I'm not concerned about that. It's not that kind of amount.
The way to keep this in mind, and we do get this question a fair amount. The gifting limit is going up to $15,000 for 2018.
Yeah, and that just means you have to report it if it's more than that. Doesn't mean they're going to be taxed.
Right. Yeah, there's no tax effect at all of doing that. There's no tax to the state
for
doing that.
Well, it's more than that amount, so I guess I do have to fill out the form and informing them. I just don't.
And what the form does, right now the federal inheritance tax limit has been, with the new tax law, has been bumped up to over $11 million. I'm not sure if your state's over $11 million, but it's $11.2 million. So let's say your gift is $25,000. What you're doing for the IRS by filling out your gift tax return, again, it's
just
very
like informing them, right?
Yeah, it's telling them that you've given a gift more than $15,000,
Right.
and in this case it'd be 10. So what they do with that form is reduce your federal inheritance tax limit from $11.2 million by $10,000.
Now, in the state, do I have to fill out a form, or is it?
No, it's just a federal form.
Oh, so you don't even there is no Pennsylvania gift tax. I googled and it came up something about Pennsylvania gift tax, and if you gave maybe that was federal.
Yeah, it was probably federal.
Yeah, I thought. The other thing was my son sold a house. I got a 1099-S.
Okay.
I guess for capital gains.
Was it his primary residence?
Well, it was 2.5 years out of the last 5.
Okay, so he.
What form would he do with that 1099-S?
You have to you have to report it on Schedule D. With, I think you reference the tax code, the exception. There's an exception for sale of your primary residence. He probably shouldn't have gotten that. That's not. Did he turn it to a rental or something at some point?
No, he just sold it. He owned it for 2011 to 2000. Somebody else was just living in it. And decided to sell it.
Yeah. So
they gave him his 1099-S.
Yeah. So
this was reported to the IRS.
Yeah. Yeah. You report that on Schedule D, and report it as basically the sale price, and the there's an exception code in there that covers the fact that it's.
Well, he's pretty astute. He knows how to do his taxes, or gets it done. I'm not sure.
Yeah, I've never used it. I've never used TurboTax. I don't know how it would handle that, but it's definitely not taxable. It's just you have to report it on Schedule D because you got that form. You have to report it, otherwise you'll get a letter from the IRS later.
How about the state then, Dave?
The state, it also would be accepted. It would be excluded from that, but it would flow from your federal Schedule D to the state Schedule D.
Oh, okay.
And just also look like a non-taxable event.
Oh, good. Well, that's good news.
Yeah.
Okay, well, thank you very much for that information.
Sure, and I'll grab your information for the gift card.
Okay, thanks again. I appreciate it.
Okay, thank you.
Bye-bye now.
Yeah, have a good day. Okay, the next thing I wanted to talk about is the withholding calculator, which is a little bit different than the tax subject that we have. The IRS just on February 28th, in fact, last week, introduced a new federal withholding calculator to help people try to understand and better make sure that their paychecks take into effect the new tax changes that were brought into law for 2018. Again, this is a brand new tax law, and the IRS, if you go to irs.gov, has come up with a calculator to try to help you figure out if the withholding that you have is appropriate. They initially gave some guidance for people with simple tax issues, and now they've come up with a modified or a new 10 or W-4 and a calculator to help you figure out your taxes. So to help tax preparers do a taxpayer checkup, they've come up with this new calculator. We'll cover this after the break. Thanks for the calls, for the people that called in. I think everybody's got slightly different tax situations, but hopefully some of those questions may have applied to some of you out there. This is Dave Weaver with User Friendly Finance and SWC Wealth Management. We'll be back right after the break.
To reach SWC Wealth Management, contact their offices at 706-0700. Now back to the show.
Hi, this is Dave Weaver again with SWC True North Wealth Management, and bringing you user-friendly finance, where today we're talking about taxes. And in fact, this next segment is just going to be about the paycheck checkup that you might want to do if you, well, you probably want to take a look at it anyway. We always try to look at people's tax situation at least mid-year to make sure that people don't get surprised at tax time. I wanted to go back, before we get into that though, I wanted to go back to that gift tax question, because a lot of people misunderstand the tax. There's not a tax on the gift. You just have to report it and do the record keeping for the IRS, so that if you end up building an estate that's worth $11 million, they want to make sure they can tax as much of it as possible. And if you've given out gifts during your lifetime that are over the $15,000, they want to make sure that that's deducted from your lifetime exemption of $11.2 million, which came into effect with the new tax law and is transferable to your spouse. So a husband and wife actually have $22 million before they have to file federal inheritance tax. So that's a good thing, because that is an onerous tax, the federal inheritance tax. The subject that we're going to talk about in this segment is going to be the paycheck checkup. And the IRS is recommending that people actually take a look at their tax situation. And they came up with new tax tables and had a calculator to help people that had simple tax returns that was available in January. They back in January, they came up with new withholding tables, which for people with simple tax situations would be able to help you make sure that by the end of the year you came out correctly on your taxes, because depending on where you were and where your income falls out, generally each tax bracket ended up with a reduction in tax, except for the two lowest ones. But the lowest tax bracket didn't really change. It stayed at 10. But generally the tax brackets changed and amounted for lower tax. So people were expecting changes in their tax or paychecks. That hasn't happened yet for some people. So again, we got some calls about that. But in January, the IRS came out with these simplified tables for people that are maybe single, married couples with only one job and didn't have dependents, or haven't claimed itemized deductions, or have any other adjustments to their income or tax credits. And I'm not sure how many people that was, but that wasn't the bulk of people that are out there. A lot of people have more complicated tax situations than that. So as a result of that, they came up with a new calculator and are recommending that everybody go and check their withholding. And the groups that should do that are two-income families, people that have two or more jobs at the same time, or who only work for part of the year, people who have children and claim credits such as a child tax credit. All these things are things that show up in a pretty fair number of returns. People who itemize is another group, and people with high incomes and more complex tax returns are going to want to make sure that their tax situation is where they expect it to be. There's an IRS publication, 505, Tax Withholding and Estimated Tax, expected to be available on irs.gov in the early spring, which you can use instead of the withholding calculator. The problem is that's going to be in early spring. This new publication is going to include people who owe self-employment tax, the alt-min tax, or have tax on the unearned income from dependents, and people who have capital gains and dividends. So all that's not going to be available till the early spring. This withholding calculator is for people other than that. So the withholding calculator asks taxpayers to estimate their 2018 income and other items that might affect your taxes, including the number of children claimed for the tax credit, earned income tax credit, and other items. And a lot of people don't really understand how that works. I haven't tried to use the calculator. I'm just telling you it's out there because I think everybody should be trying to make sure that their tax situation is where they think it is supposed to be. So to use that calculator, you have to do a couple of things. First, you have to get your most recent pay stub from your work and make sure it reflects the amount of federal income tax you've withheld so far in 2018. If you have it completed, a copy of your 2017 tax return, and if not, possibly your 16, to help you estimate your income and other items for 2018. The new tax law does change some of the itemized deductions, so you have to think about that as well. It's a complicated process. It's like actually filling out your tax return, I think. Keep in mind the withholding calculator results are only as accurate as the information you put in, so you want it to be as accurate as possible. It doesn't request any personal information such as your Social Security number, address, or bank accounts. The IRS doesn't save or record the information in the calculator. Hopefully, just like anything else, if you get a call from somebody trying to impersonate the IRS, that's probably not the IRS. They'll typically send a letter beforehand. So this has nothing to do with any of those scam calls, and you shouldn't get any calls just by filling out the calculator. So just beware. You want to use the results from the calculator to try to figure out if you need to file a new W-4 form, and if so, what information you need to put on the W-4. There's no need to complete the worksheets that accompany the W-4 if the calculator is used. So again, I haven't seen how that works yet, but apparently it's out there. As a general rule, the fewer withholding allowances you enter on the Form W-4, the higher your tax withholding will be. So entering a 0 or 1 on line 5 of the W-4 means that more tax will be withheld. Entering a bigger number means that less tax withholding will result. If you complete a new W-4, you should submit it to your employer as soon as possible because your withholding occurs throughout the year, and the sooner you get this under control, the better. Otherwise, you may end up with a big tax surprise at the end of the year. Like I said, the IRS is going to be working with businesses as well as tax and payroll communities to help educate the public about the withholding, but it could be a while before it actually gets implemented across the board. So at the very least, you want to check your withholding if you've changed jobs, if you're working multiple jobs, just like you talked about earlier. The tax credits are going to change. Try to get a handle on what those changes are to the tax law, and make sure that you, again, don't get a big surprise at tax time. Some of the things that we talked about before in the show are the big ones that I think affect people are that if you have, regardless of what your situation is, they're changing from standard deduction plus personal exemptions to a $24,000 for married couples and $12,000 for single people standard deduction now. But that replaces your old standard deduction and your personal exemption. So if a married couple was around $12,000 and had two people with around $4,000, you're around $20,000 of exemptions that you were getting before. Now you have 24. So if you itemize, the situation is a little bit different, but try to get something that explains what the tax law changes are and try to figure out where you're going to fall out with that. We've been trying to cover that with our clients as we go through our quarterly meetings to make sure they kind of get a handle on that. So if you have a tax preparer, they're probably going to be too busy to deal with it right now. They'll be after tax season's over, but get with whoever is doing your taxes, and hopefully they can help you make sure your situation's under control. The changes are going to be are different for everybody. What we're seeing is some people are up, some people are down, but try to get a handle on your tax situation and make sure you don't get surprised when it comes to tax time. The cap on the state and local property taxes plus income or sales tax, where there was no limitation before, will now have a $10,000 cap. I think that's going to affect more people than what we think. And the miscellaneous deductions going away, so the 2% items that had a 2% of your adjusted gross have been taken away. That includes tax preparation fees, unreimbursed business expenses, such as a home office deduction, and the deduction of investment advisory fees. So all of that whole section goes away. So outside salespeople, people that have a home office that their employer doesn't have a workspace for them at work, or they they work from home for a couple of days a week, all that has gone away. I can't imagine that's going to stick, but for now it's out of there. So take a look at those things. Try to make sure your withholding is correct. And again, the IRS, if you go to irs.gov, there's a calculator out there to help you figure out what your situation is and where you may fall out in terms of your withholding. We'll take a break, then we'll get out to some of the subjects the IRS is looking at for audit this year. And feel free to call if you have any questions. Number here, 540-0580 or 800-724-5801. This is Dave Weaver with User Friendly Finance. Hi, this is Dave Weaver again with User Friendly Finance, brought to you by SW Wealth, True North, SWC Wealth, SWC True North Financial Management. And we're talking today about some of the subjects related to taxes, and the subject we're going to cover next is some of the red flags the IRS is looking for. This came from an article in the New York Post, and I thought it was just kind of interesting for this year anyway, what they say the IRS is looking at. Some of it's consistent with what I saw in my tax seminar. Some of it's not. By the way, I want to make sure again that I mentioned that SWC True North Wealth Management is located. We have two locations. We're in Palmyra and Carlisle. Palmyra, we're at 103 West Main, and in Carlisle, we're at 35 East High. You can reach us by phone at 717-706-0700 or via the web at swcwealth.com. We try to get to all of our calls or emails within 24 hours. And if you have any questions that we haven't covered on the show, anything you'd like us to cover on a future show, feel free to give us a call. We're taking a break from our 8 wealth management issues at this point just to quickly cover tax. And then again, we're going to have Mike Ivankovich. I don't know if you remember, we've had him on before, who is he helps people with downsizing and also trying to value some of the assets that they, or the property that they have that they're thinking about trying to sell when they downsize and move on in life, or even if you're just trying to downsize because you want a little less complexity in your life. So anyway, that's the subject again. We're going to be talking about the some of the red flags that the IRS is looking at this year. The IRS, people assume that they're actually taking a look at everybody's tax return, but they actually have a software program that may randomly select you and compare other returns that are similar to yours to try to detect any anomalies, or you may be linked to a family member or business partner who's also being audited. That's some of the ways they get it, but they have automated programs that actually do this. The IRS can audit returns up to 3 years old, and if you have inaccuracies or make fraudulent types of, not fraudulent, but incorrect deductions, there's a 20% penalty for the amount that was disallowed for filing an erroneous claim. So not only will you owe tax, but you have a 20% surcharge on top of that for filing an erroneous claim for a refund or credit, or $5,000 if the tax was deemed frivolous and there isn't enough information to assess correct or incorrect information. So that means if you put in something that you don't really know about, but you've thought, what the heck, I'll try it, there's a $5,000 penalty for doing that, and that's considered a frivolous return if the IRS considers it frivolous. And that's a one-time penalty. The erroneous claim for a refund is 20% of the amount that was disallowed. So you want to try to be as accurate as possible. People get scared when they get a letter, but you just want to first figure out if they're correct. The IRS sometimes makes mistakes, just like people sometimes make mistakes. But don't panic. Try to figure out if they're right or wrong, and then if they're incorrect, figure out a response and get back to them. And if they're correct, you also want to figure out if they are correct and just do what they tell you to do. The IRS audited less than 1% of returns last year, and that number may be even lower this year due to the number of agents that they actually have working on this stuff. Okay, so some of the here's the 5 things, or 4 things, 4 major things that they're auditing for this year. One of the most common things that are being audited right now are above average deductions for charitable contributions. So the IRS has a sense of what's a fair amount of deductions based on your income and the income bracket that you're in. And if someone blows past that threshold, it could lead to an audit. If you earned $120,000 and claimed $50,000 at charitable contributions, they may smell that something's amuck. If you're generous, if you're that generous, have proof ready in case of an audit. And many legitimate charities give receipts to donors to keep them safely. So keep them safely stored. So if you feel like you're on the edge of what's legitimate, make sure you have documentation of what the information is. Just like anything on your tax return, you want to be able to have documentation. You don't have to file that with your return, but you want to have it available just in case the IRS calls, or sends you a letter. They probably won't call it on something like that. They would send you a letter. They have a lot of desk audits that are just letters that are generated by their computer program. Nobody's sitting there collecting, trying to figure out who to audit. They have programs that kick out anomalies, just like we just talked about with the gifting. So I think for the last 3 or 4 years in my tax seminar, they've talked about the fact that the IRS is getting more and more scrutiny on charitable contributions because there is a lot of abuse there. People just say, I know I gave a lot. I think it was $4,000 or whatever the number is, or $2,000, and don't have any documentation at all. Back in the old days, you could say Goodwill and have something signed by Goodwill that may not be good enough anymore. They have, I think the Salvation Army has a sheet. There are different places where you can get a sheet that give valuations for personal property you donate, and use that as a documentation for what you do. So you can figure out how many shirts and how many pairs of pants, et cetera, that you've given away. It gives it an average value, a high, low value, and it has it for a bunch of different items that you can deduct. Use that if you've got legitimate deductions. If you have more expensive property, make sure you have documentation of that. Vehicles, they've changed the rules. Before you give away a vehicle, make sure you understand that before you give away property like that. The next thing is claiming a loss from a hobby. I just ran into one of these the other day where it was somebody who was doing something that, it was definitely a hobby business, and you want to know what the difference is. The IRS allows hobby deductions for expenses up to the amount of income generated by that hobby. Say the taxpayer is a knitter, that person might sell some scarves and hats on the side for everyday business, but can only claim a deduction for the expenses up to the amount that was earned. So what they're trying to do is prevent people from claiming a loss. So if you have a hobby that's a business, just be careful about it. If it's truly a business and it shows up on Schedule C with a profit, you have less of an issue. You want to make sure your expenses are documented, but the IRS can tell, what's a hobby and what's not. The horse trade is one where the dollars get high, and sometimes people get carried away with that, have consistent losses. That's problematic. Withdrawing from a retirement account early, there are some scenarios where you're allowed to take withdrawals from a retirement account prior to 59 and a half. And some of those examples are using your home for the first-time purchase of a home, qualified education expenses for a relative or a member of your household, some emergency medical costs, but there's a 10% penalty when none of those exceptions apply. Almost 40% of taxpayers didn't report the withdrawal when they didn't qualify for the exceptions, and the IRS still knows the withdrawal was made. They get a record of it, so if you don't report it, they're going to find it. So you want to make sure that's one of the things. 1099s, almost regardless of the thing behind it, INT, DIV, whatever, they get a record of it. And just like that earlier call where they had they got documentation from the sale of a home. If it comes from if it's an IRS form that the IRS gets a copy of it, assume that they'll get that information, and you're going to have to report it or you get a desk audit. The last thing that's unusual and just applicable to the tax year is that you are allowed to deduct 2% of your business expenses and get part of that claimed under miscellaneous expenses. That's being disallowed next year, so a lot of people are thinking that they'll rush and get those expenses put into this year's tax return to make sure they get some claim for it. Into their 17 returns. So if you're going to do that and try to squeeze some stuff in your 17 return, don't do that. The IRS is looking at that. If it looks out of line or unusual compared to your history, you may get hit for that. So I guess that's it for that. We'll come back another day and talk about taxes again for people that have questions. Probably do it a little later in the month of March. Don't forget about the seminar that we're doing. It's about helping you plan and retire on purpose. The date for that is Wednesday, March 21st at the Bosler Library at 6 p.m. Call 800-457-1367 and or go to swcwealth.com. This is Dave Weaver with User Friendly Finance from SWC True North Wealth Management. Thank you very much for listening.
David Weaver, Megan Wall, and Tom Pop. Securities offered through HD Vest Investment Services, member SIPC. Advisory services offered through HD Vest Advisory Services, 6333 North State Highway 161, 4th floor, Irving, Texas, 75038, 972-870-6000. SWC Wealth Management is not a registered broker-dealer or independent investment advisory firm.